Welcome everyone. Thank you for attending the beginner session with me. I'm going to start out by introducing myself. My name is Blake, and I've been trading with Ken for almost 2 years now. And I have some important things to share with you guys today. We're going to go over price reversal points, Fibonacci basics, Doji basics, risk management based off of pair types such as exotics versus major currency pairs, and I'll explain what that is more later. And we're also going to look at how to use the magnet tool and how to use trend lines. So let's go ahead and get started. Let's see. Oops. Here we go. So we're going to go ahead and start by going to TradingView. It's just tradingview.com, and then we can go ahead and pull up a chart. Oops. We can go ahead and pull up a chart by typing it in up here. For example, we can type in GBP USD. This is one of my favorite pairs to look at. And then we can go ahead and click right here. It says full feature chart. That's how you open up the chart. And what I usually do is go ahead and this screen is still open, so I usually X out of that one just to keep things nice and clean. So let's go ahead and start off with the basics. I want to engage the room just a little bit. How many of you do and do not know how to use the candles to determine what is going on, meaning high to lows? Oh, is it not sharing right now? It should be. Can you see the screen? Go ahead and give me a 2 in the chat if you can see the screen and hear me. Perfect. Okay, good. All right. So, all right. So basically, we're going to go over really quickly just how to determine. You can't see the screen. I'm not sure what to say, Gilberto. Try refreshing. You can try exiting and entering the stream again if maybe that will fix it. So let's go ahead and go over really quickly what exactly the candlesticks are telling us. So there's two main types of candlesticks. There are the green ones and the red ones. So you can probably figure this out. Green ones mean price went up and red ones mean price goes down. They are very similar in that these very skinny parts, the ones that look like just a line, those are called wicks. Some people call them shadows. And they are essentially just telling you at one point in time, the price did go up to that level or down to that level, depending on if it's above or below the candle. This is for both green and red ones. The difference between the green and the red candles is that if it's red, it started at the top of the body, which is the filled in section, and it ended at the bottom of the body. And with the green, it's the exact opposite. It started at the bottom of the body and ended at the top of the body. So that's how we determine what the candles mean. There's a lot of different patterns that form with the candles, such as dojis, which is something that we'll go over later on in this session. So I also want to talk about what exactly a PRP is. If you do not know what a PRP is, go ahead and say the number 3 in the chat. Let's see who does not know what a PRP is. All right, let's go ahead and go over PRPs. Let's see if there was something already. Here we go, right here. PRP stands for price reversal point. And it's really easy tool to use, and it's very powerful. It's a really good confirmation to add to your arsenal of trading tools. So it's really easy to find. On the toolbar over here, you just click on the trendline tool, the little arrow, and you click on a horizontal line. You can also press Alt-H if you like those sticky keys, or not sticky keys, but shortcut keys. And all you're looking for is starting on the 1 hour and up. you want to see where a common area that price likes to come down to and bounce off of, both going down, using it at that point as a floor, as well as coming up and using that point as a ceiling. So to get an exact point, we also want to use this other tool. Now, this is something that I wanted to go over in this session. This is called the magnetic tool right here. You click on it, and it's a toggle click. So you try to click on it one time, and then it'll be used for all the other tools. And what the magnetic tool does is when you have a tool, it'll zap to the certain sections on the chart so that you don't have to, you can be precise and you don't have to zoom in to find exact price levels. For example, as you can, I don't know if you can tell, but when I just lightly go over these areas, it's snapping to the points of these two lows here, or it will also work with these highs, even though my cursor isn't exactly perfect. So let's go ahead and place one here, and we're going to check if this is a relevant PRP. Again, that's a price reversal point. So it's this blue line here. And what we're looking for the confirmation is that we see that price already bounced off twice here. We want to see more instances of that happening with both on the low and the high. Right now we're looking at the 1 hour time frame. I recommend that you use that one as your lowest one for this particular trading strategy with the PRPs. So let's go ahead and zoom over. Let's see if we zoom out. There doesn't appear, it looks like price hasn't been in that area for a long time. Let's see if we can see our blue line right over here. All right, so if we look right here, we can see, I'll go ahead and highlight the points. Right here, oops. Right in that section there, we see the tops of the bodies of the candles. We're finishing there. The top of this one finished there. The bottom of this one finished there. It looks like when you're using the ellipse tool, I would actually recommend turning off the magnet mode just because it tries to snap on to the locations. But the magnet mode is good for almost all of the other trading tools. So as we can see, price is using this level in past data quite a lot as both support and resistance, meaning a floor and a ceiling. And that makes this a relevant PRP. So this point is still relevant. And so if we go back into a little more recent data, we scroll back over to where we were before. Let's go ahead and see if there's any points in time after we mark this up. So we mark this up right here. Remember these? I'll go ahead and highlight those as well. And it looks like it went into the zone here as well. It went down and then came back up. I'll make the arrow to show that. So let's go over a couple more basics and then we can go on to another advanced topic after that. So let's talk about pips really quick. Exactly how much would you make necessarily if you, say, caught this second touch here and then you got out at this highlighted red candle here? How much money would you make on this particular trade? This isn't necessarily a realistic trade. I'm just using it as an example to show you how valuable a pip is. And I also will show you the visualization of that with the long position. I know this is going to be a review for a lot of you, but this is mostly to help out the people that are a little newer. So we can use the magnet tool again for this, which is really helpful because now we can get an exact perfect there as well as there. So that is 124 pips. You notice that it says 124.6. That 0.6 is the micro pips. Now micro pips are exactly 1/10 of a pip. I'll go ahead and show you what that means. I can only show you on the 1 minute time frame, which I remember do not recommend trading it on the 1 minute. I don't recommend even looking at it, but it is just for illustration, so I can show you exactly how much a pip is with seeing the chart. So in total, this is 2 pips because the red is one and the green is another one. And then that's a full pip. And then this one, let me move it down. This one is going to be a micro pip. All right, so we can see here, the pip is exactly 10 times as big as the micro pip. This fits in here 10 times all the way up. And a pip used to be the smallest amount a currency could possibly move against another currency at one single point in time. But now we have the micro pip. So now we can determine exactly what a pip is. Let's go ahead and zoom back out to the 1 hour, and let's look at how much we would have made on that trade that we were looking at just a second ago. So on this one, I believe it was 126 or something like that. The top 124, excuse me, 124. So how much money would we make on 124 using proper risk management? Now this is important. You have to use proper risk management, otherwise you will seriously damage the value of your account. Who is familiar with proper risk management? I want to see a 6 in the chat if you are familiar with proper risk management. Perfect, perfect. All right, let's go ahead and go over it really quick. I see that a lot of you already know how to do it, but it's very simple. So all it is per $100 in account, use 0.01. It's that simple on all major and minor currency pairs. Yes, exactly. Right. So if we're using proper risk management and we caught 124 pips, let's say we had a $10,000 account. How much money would we make? Well, we would be using 1.00 or 1 standard lot, and we would have exactly $124,000 increase on our $10,000 account. And this is for, maybe we don't have a $10,000 account. How do we determine exactly how much we make on, say, a little bit of a smaller one, a little bit of a bigger account? Well, that's really easy. You can just take this number here and divide the number to get 12.4% gain. If you're using proper risk management, no matter your account size, if you took this exact trade here, you should have 12.4% gain on account. So that's how we determine that based off of percentages and pips. I want to talk about, could you break down into two? It would actually be considered less risky to use 2.5 lot sizes, because that way you have the potential to exit on one of your trades while you can keep the other one in and maybe even use a stop profit. We can talk about stop profits in just a little bit when we look at the Australian dollar versus US dollar, and I'll explain how to use a stop profit with that, which is something that you definitely want to implement into your trading style if it's something that you're open to. So who is familiar with Fibonacci's? If you're familiar with Fibonacci's, go ahead and just say the word fib, F-I-B, into the chat. If you're not, go ahead and tell me that as well. We can look at Fibonacci's. Perfect. Not familiar. All right. All right, let's go ahead and go over it pretty quick. Looks like most of you are saying fib. So let's go ahead and go over it anyways. It's always good to have a nice refresher. So we're going to look at USD JPY. The reason why I like to look at USD JPY is because it is excellent for following most technical analysis. So if we zoom out here, we're now looking at the daily, which is a pretty relatively large time frame. And all we have to do for the fib is we click on this Andrews pitchfork right here. That's this icon here. But instead of that, we click on the little arrow, and then we scroll down to the Fibonacci retracement. When someone says throw a fib on a chart, they're talking about this here. So all we have to do is you either use one of 3 points for each the low and the high. I'll go ahead and write them down in the text box. So you either use absolute low, relative low, or local low for the lows, and then same thing with the highs. Oops, my capitalization is very messed up there. So for this one, the most relevant thing you can do is using the absolute lows and absolute highs. So this is a great way. This is a great chance to practice your magnet tool. So go ahead and click on the absolute low. The magnet loves to lock onto that one, and then we just scroll it all the way up, and we're looking to match it with this absolute high right here. But we actually want to pull it over even farther, all the way over to here. And so we can go over really quickly, why did this bounce off of the 0.5? It did come a little bit lower, but at the same time, it did bounce off of it, and we definitely could have made a lot of money on this one. So let's go ahead and look at why it did this. If you're familiar with the golden ratio, I'll show you. Say, or Fibonacci ratio. It goes like this. It has the number 1. It starts with the number 1, and then it goes. You add the 2 previous numbers to get the next number. So it's 1. 1 plus 0 is 1. 1 plus 1 is 2. Then 3. Because 2 plus 1 is 3, and then 2 plus 3 is 5, and then 8, 13, 21, and so on. So if we look at this pattern here of the Fibonacci numbers, how does that help us with trading? Well, if we look at the previous number and divide it by the following number, we see at first 1 divided by 1. Who cares? That doesn't make any sense. It's just 1. But the next one here, the very second fib or first retracement fib is 1 divided by 2. 1 divided by 2 is 0.5. So that's why we use the 0.5 only initially off of the movement. So we see that price went up, and then it came down to the 0.5 and decided to respect the 0.5 and then come up from there. So that's why we only use the 0.5 initially. If you do continue this much farther and you get numbers in the millions or so, they'll start to approach the ratio, because 0.5 is the ratio, of 61. It's actually 61.8032%. However, we ignore the 032 part because we don't need to be that perfect. 618 is fine for that ratio. So let's go ahead and see exactly how many pips this was in the full movement, and also a more realistic trade with an entry on the 0.5. So if we entered exactly on the 0.5, we can see there was some drawdown as well. But if we exited on this one here, 236, which is where I recommend you exit off of the 0.5, on the realistic trade, you would have got 1,000 1,321 pips on a single trade. Now, it did go higher. It did go up to 1,787 pips. However, this is much more realistic. This is something that you could have as a take profit, and you can set it and forget it. Very realistic trade, 1,314 pips. Now, how much is that in terms of dollars? Let's go ahead and take a look at that. Let's use the same account size. I like to use this account size because you use one standard if you're using proper risk management, and this is a major currency pair. I'm going to go ahead and go over the major and minor currency pairs in just a second to explain that a little more. So if we're using this, we're using one standard, 1.00. We're making $10 per pip. So this was, it was 1,300 pips or so. So that would mean that you'd more than double your account using proper risk management on this thing, a little more than that. I don't remember the exact number. Single trade. Using proper risk management, you would more than double your already pretty large account of $10,000. You would now have $23,000 plus on this just from this single trade here. So let me see. Right. So let's go ahead and go over another trading strategy. Let's go ahead and go over the dojis. So I'm going to go ahead and delete the Fibonacci for now so that we can go on the lower time frame on the same pair and not have the lines to distract us. So now we're looking at the 1 hour. Does everyone feel like they know a little bit more, or at least a pretty good amount about Fibonacci's now? I want to go ahead and see a 7 in the chat if you're feeling that way. Good, good. Awesome, awesome. Good. Perfect. Love to see it. So let's go ahead and go over dojis. And if we need to, we can recap at the end of the session on those if we're still feeling that we need to do that. So let's look for some dojis. Anyone know what a doji is? Try to draw one. I'm going to draw a pretty crude doji here. Essentially looks like this. I'm trying to make these lines straight. This is what a doji looks like. It's my best drawing of one. Yes, that is absolutely correct. It is, it's just where it has a very small body and similar sized top and bottom wicks. So let's go ahead and look for it on this pair. Let's see if we can find any. I see one right here. So essentially what a doji is we're looking for a price reverse. So if it's going from low to high or from high to low. So if we see in this circle here, let me make it a little smaller. We can see this thing looks kind of like what I was drawing, but it's actually even a little better, of course, because it's on the real chart and it's not freehand. So we can see that the wicks on this candle are very similar in size, and the body is extremely small. The price was going up before this, as we can see. And then once it got to this point, what happened? Once it got to the doji, it started to go down at least a little bit. Keep in mind, each of these blue dotted lines here, those are each an entire day, entire 24 hours on the charts. And something really cool is going to happen in 6 minutes from now, which I'll talk about in just a second. So as we can see, it was going up, and then we saw a doji, and it went down for more than 24 hours. So it might look like, I know that it ended up going up after this as well, but you definitely could have at least got an entry that was pretty good just by using this strategy alone. Yeah, we can zoom in. Let's go ahead and zoom in on this to see the doji a little better. So if we have this here, and if you just entered off of the basic doji strategy, that means where you see a doji and you enter, then you would have entered right here. And this is being recorded, yes. And depending on where you exit, there's a low here. That would be 52 pips in a very short amount of time. However, I have a much better example of a doji on GBP USD that I know is already on the chart. So let's go ahead and look at that one. We looked at this one yesterday as well. So I'm just going to go over it really quickly just for the people that weren't able to make it to yesterday's session, and then we can go ahead and move on to another topic, especially what's going to happen in 4 minutes. So essentially, what we're looking for, oh wait, this isn't a good one. Where is it? Here it is. So this is a different doji strategy. This one's a little bit more advanced than the basic doji strategy. This is where you look for a doji. As we can see, this red candle here, price was going down, and then we see the doji happen. And then what happens? The price goes up right after. So on this particular trade, we don't actually enter on the doji. We want to wait till we see the candle after. We want to include this wick, and including the wick and the whole entire body of the candle, we want to see it being larger than the previous candle. And so in this scenario, we see that counting the wick, this green candle here is larger than this red one before the doji. And because of that, this is called the confirmation doji strat, which is right here. I'll go ahead and take a screenshot of this in just a sec, and I'll put it in the chat for you guys. And essentially what we're looking for is just a continuation after this first green candle. So this first green candle is not counted in the calculation because that one we're just watching at that point. So right away, next candle, we place an entry for a buy on GU. Yeah, never mind. So exactly how much would you make? Well, we already have that right here. On the same size that we've been using for all the other ones, $10,000. You'd use the same lot size because this is a major currency pair. You would have essentially 11.7% in profit, meaning $1,176 on that size of account. And this is a very realistic exit because this is a double top right here that we can see. So with that being said, there is 2 minutes until the new day, the new trading day. So let's go ahead and zoom out and go back to modern data, and so we can see what's about to happen. As you can see, it looks like there's basically missing a blue line right about here. And if you see that, you'd be absolutely correct. As we can see, there's a blue line here about that distance. That's about this distance as well. Let me move this. We're going to talk about swaps in just a second. In 1 minute, there will be a new blue dotted line, and that means there's a new trading day. It happens the same time every single trading day. Local time here in Arizona, 2 p.m. Whatever time it is right now is the time that the trading day changes as well. So what you can do is if you're in any trades that you got into today, if you're still in those trades, you'll notice in 1 minute from now, you'll see on your MetaTrader 4 app on your phone, you'll see that there is going to be a swap. And it will usually be minus maybe a couple cents, depending on your lot size. It shouldn't be too bad. It's usually a little bit, less than the initial charge. And yeah, I can show you how to set up the blue lines. So let's go ahead and It just ended. It's now 2 o'clock. So there should be a blue line coming onto the chart in just a second. Sometimes it takes just a second for it to show up. And then I'll show you how to add the blue lines as well. I don't know why it's not working yet. Looks like it's taking some time to process it. While it's doing that, I can show you how to add the blue lines. It's pretty easy. You just go to settings. And then I believe it's time zone session. Yeah, session breaks. So you put your time zone in that you have, and then you click on the check mark for the session breaks. So you can choose a color you like. I like the blue dotted lines. You can feel free to choose any color you like. And then you just press OK, and then you should have the blue dotted lines. So I'm not sure why this one isn't showing up yet. Let's go ahead and take a look at another pair. Let's look at NZD one. It's a good one to check. There we go. So as we can see, there just appeared this blue dotted line, and this candle just formed. This is a 2-minute-old candle, and you can see that it's already fairly large in comparison to this previous candle that has an entire hour to form. It's pretty comparable in size. And the reason why is there's a lot of people that wait right till after the new day to place a trade. They do that partially to avoid the swap fee, because swaps are usually negative. Sometimes swaps are positive, and you will actually get money for holding a trade over the trading day. And that can literally mean as early as 1:59 local time and holding it for 2 minutes just to make it over the barrier of 2 o'clock and then exiting a trade. That will, in fact, make you have the swap fee. All right, let's see. All right, let's go ahead and look at trendline use. So the very best pair for trend lines, in my opinion, is USD CAD or UCAD. UCAD is a major currency pair, and it's pretty easy to use trend lines with this one, especially on long-term basis. So let's see, I'm trying to eyeball and see if there's any good examples that we can use. I think this is one here. So all you have to do to check if it's a specific trend line is you just use the extended trend line here. You definitely want to have, you should want to have the magnet mode on to use this. And by the way, this recording will be on our website at the bottom of the page. I'll show you that after this. So we go ahead and just click on the top, and because of the magnet tool that we previously saw how to use, it's right on the exact top, even though my cursor wasn't necessarily exactly at that point. So all I'm doing is seeing if this tends to line up anywhere. So right here we can see there's a relative top right there, which we're talking about earlier with the Fibonacci strategy. And we can also see the bottom there as well. This is something UCAD is great at. UCAD does like to use what's called a piercing trend line, which is where it does go through the chart. That doesn't make it any less relevant on this particular pair. For some pairs, they don't use piercing trend lines, and you'll have to find just a normal trend line, which I can show you how to use those as well. It's pretty simple. All we're looking for is a lot of hits, similar to the PRP that we went over earlier. And then we want to see with current data, we would realistically be able to enter into a sell position at that big circle at the top. So let's go ahead and zoom in on this. I wanna gauge the room a little bit. Has anyone used trend lines before? I want to see number 8 if you have. I want to see any other number if you have not. Just to know how much time I should spend on trend lines. Okay, it looks like most of you are pretty familiar. Okay, perfect. All right, so we can go over this for a little bit longer. Essentially, you can enter on either of these two hits. There is actually 2 different hits of the trend line in this circle here. You can see this green candle as well as the wick of this small bodied candle here as well. This small bodied one here, oh yeah, I can show you how to draw that again. So it's pretty easy. You click on the arrow here, it'll have the trend line. If you click on that, you can use a normal trend line, but I recommend you use the extended trend line and also the magnet tool. And we just use that point and then that point there as well to make this trend line. So let's go ahead and keep doing what we would be doing the whole session, and determine how much we would make on this trade, and also why is this red one here in particular a really good entry. This green one here is also really good. In fact, it's actually a little bit price-wise better. However, the red one here is more confirmation. The reason why is because this is a doji pattern as well. We went over dojis earlier. However, this is not a normal doji. As you can see, the wicks are not similar in size. However, it did barely make a new high relative to anything in past data, and it has a small bottom wick and still the small body. So what we call this is a resting hammer doji. Usually the bottom wick will be even smaller. However, for UCAD, yeah, also Dragonfly is actually the other way around. That is the one where Dragonfly is where the small body's at the top, is usually how that one's referenced. This one is just where the long body is at the top instead of the bottom. So let's go ahead and look at from this red candle here. This is a very realistic entry for a trade. Let's go ahead and mark it up with the short position tool, which you find here. Go ahead and click this arrow, short position rather than long. We enter right away. Let's put the red as our drawdown, which is just the maximum amount that we could possibly have lost during the trade. And we'll put the green as this doji right here. This is a very realistic exit because of what we learned from our doji strategy earlier. So again, this is the 1 hour time frame. We were looking at the sell on UCAD. And let's go ahead and determine how many pips in profit would you make from this particular trade. From this one, looks like we would have made 95.9 pips on this one. Again, that's 95 pips and 9 micro pips. So on our same size of account, now this is a much shorter time frame trade than the ones we've been looking at before. That's why it's not nearly as much as, for example, the UJ one that we looked at for 1,300 pips. So this is only 95 on the same size account. Let's do that. Go and do this over this really quick. So that would be $950. All right. This is a pretty good trade. Again, that's almost 10% on your account on any size of account. Yeah, for 1,000, it's really simple to do. You would just divide by 10. So you'd actually make $95. Still almost 10% on account. The percentage is the same no matter what. And again, this did go down a little farther. This is also a realistic exit because of the double bottom you see here as well. but I want to stick to what we learned in the session today about the dojis. So let's go ahead and so we talked about this already. What else are we talking about? Let's see. Right. Okay. Let's go ahead and talk about proper risk management on non-traditional pairs. So again, I'm going to go back to GU, and I'm going to go ahead and give you guys the screenshot for this. Here it is. Let's see if I can get it all in one frame. All right, here we go. Can go ahead and put this in the chat. There we go. All right, so what I'm referring to is this one here. These are the 7 major currency pairs. The order does matter. There is no such thing as USD GBP. There's only GBP USD, not the reverse. Same with all the other ones. It's only one-way street. They are not in order of anything in particular. They're just the order that I remembered them when I was typing them up. So those are major currency pairs. What is a minor currency pair? My favorite minor currency pair is GBP JPY. I like this one because my 2 favorite major currency pairs are the pound dollar and the yen, the dollar yen. So with this one, it follows a lot of the same things that both of those other 2 ones follow. So previously, Lucas mentioned the dragonfly. We can see a dragonfly right here. This is the opposite of the hammer doji right here. And we can easily use our strategy to go ahead and buy that as well. And that would be, I'm not going to do the math on this one, but this one just on the top of the green here, that's 161 pips in 9 hours. That's a pretty good trade. So again, we want to use proper risk management for all of our trades. However, the amount that we use does depend on the pair that we're looking at. For example, these ones we can all use the normal 0.01 for every $100. Yes, that's correct, Lucas. Hammer does usually mean sell and dragonfly usually means buy. However, the dragonfly has to be on the bottom. It has to make a new relative low, as we can see here that it did. Even this part isn't even as low as this one. And then for hammers, they have to be a new high on that particular candle, including the wick. So now let's go ahead and look at one that you would not want to use normal proper risk management on. This is you try, and you would want to use less leverage on this one. So normally we want to use 0.01 for every $100. On this one, you can just divide by 10. So it's, but you can either divide by 10 or some people say divide by 4. It depends on who you ask. You just need to know that you should not be using the normal amount of leverage for this particular pair and pairs like this. That's because this is called an exotic pair. It's not a major nor a minor. All pairs are one of those 3 categories. They're all majors, minors, or exotics. U-try is an exotic. The reason why you wouldn't want to use normal proper risk management on this one is because let's say you got a really good buy right here at this. I'm going to zoom in actually. You can see that a little better. Let's see. Let's pretend like we got a pretty good buy right here, and we're swing trading, so we're holding it for a long time. We see we go up a lot in pips as well. However, we have this drawdown here. Even though it went all the way up to here for 2,788 pips at one point in time, it did come down here for minus 566 pips. That is quite a lot of drawdown. You don't want to be in that on normal proper risk management. That will seriously affect your account negatively. if you are using 1/10 of normal risk management, then on this trade from, I think this is the entry I said, let's say you got out the top here on the $10,000 account with 1/10 of proper risk management, you would get 27% gain on account still. That's plenty. That's 1/10 of proper risk management. That is excellent. That's a really good trade. And as you can see, it went up even farther from there. So remember, just keep in mind, if you're on an exotic like this one, you don't want to use normal leverage. Let's also look at USD ZAR. That's another one that is also one where you have to use less than normal proper risk management. Again, it just moves so quickly. This is 1,700 pips right here, even though if you were in the buy, it went up 84,000. You just have to use less leverage for these ones. So this being said, we have 15 minutes left in the session. I'd like to take any questions you guys have, anything you want me to go over again, or I can just give you my analysis on some pairs. Again, we went over today, we talked about PRPs, Fibonacci's, Doji's, risk management based off of the individual pair types, how to use a magnetic tool, and trend line use. Is there anything anyone wants me to go over again? ADX. Can you focus on entry? And markup GJ. Sure. I'm not super familiar with ADX. So what is leverage I prefer? I prefer proper risk management leverage, which is on all major and minor currency pairs, 0.01 for every $100 in account. So let's go ahead. We can go up on GBP, JPY. We can look at GJ. Is there any chart that explains doggies? I think you meant dojis. There's something on Investopedia that has really good for dojis, and I think that we will be adding something to the website as well about dojis as well. Yeah. Oh, JCP. Okay, perfect. I'm not familiar with that particular app. Would I recommend scalping to maximize profits? I would say I do once in a while. However, I really recommend using longer term trades. Longer term meaning 24 hours and up is usually better, with many exceptions, of course. Let's see. Yeah, I can go over Fib after this one. So let's go ahead and look at GJ for just a second. I'm going to do a little bit of advanced calculations for this one. First, if we look at the daily, I'm trying to see if there's any patterns that are forming. Okay. For GJ, long term, I'm not seeing too much. I do see the inverted head and shoulders a little bit. Let me see. Yeah, for GJ, I wouldn't recommend getting into or out of a trade. I wouldn't recommend going into a trade right now. It appears that it just wants to continue long term to go up and short term to go down. So yeah, let's go ahead and go on the DXY really quick. And then we can look at the Fibonacci's with DXY using the magnetic tool. So this is our what we did on the last session. We marked this up. We want to see price retest on the same level. Because price came into this zone 3 times and left all 3 times, it appears, at least because of that single confirmation, just from looking at it really quickly, that the DXY should be going down, which means that the US dollar would be decreasing in value. So yeah, let's go ahead and throw a Fibonacci onto this using the magnetic tool. So we do the whole thing. We don't see too many things lining up. There's just a few, maybe this one area here and this area here, a little bit of lining up. However, I don't see a lot, and therefore I could see DXY making new lows. So we can use a future fib, which I know that we have not yet talked about. It is a more advanced trading method, but I can do this analysis for you guys. It looks to me like this is a much better price level. I think that the DXY should be coming down exactly to here. I'll go ahead and mark that with a horizontal line or a PRP. And let's go ahead and see on past data if this is a valid price reversal point. So again, it's this blue line that we're looking at here. We can see that right there. That's good. That's good. These are both good. We can see a couple more here. I would say this is enough confirmations, especially for the DXY, which is just an index. It's not an actual pair, to determine that this is at least a PRP. So what that means is that if price does decide to continue to go down, it should stop at the blue line here. I can go ahead and take a screenshot of this for you guys as well. Put that in the chat. And then I want to look at AUD USD after this, because that is the rolling pair for my session so far. So let's go ahead and look at that. So again, recently we had it hit take profit 2. This trade was given 3 weeks ago. This is definitely a swing trade for sure. As we can see, it being 18 days ago is when I called this one out. And again, our entry was this orange line. Our stop loss, our original stop loss was this red line all the way down here at the bottom. Our 3 take profits were here, here, and here. We since then moved up our stop loss because it hit TP2, or even just take profit 1 as well. With our current stop loss just around this area. It doesn't even need to be specific. It just needs to be above the entry. If you did take this trade, then I don't know why this line's here. You did take this trade, then please make sure that you have a stop profit. Just means that your stop loss is above your entry, so that you don't have to be risking anything on this trade for your last trade. TP1 and TP2 should already be out. So it's just, we're looking at TP3 now for this one, just in case the reversal. Again, if DXY does choose to go down, that would mean that this would be going up. Hopefully here to hit at least TP3. As we can see, kind of interesting, remember this was all marked up 3 weeks ago. Price did respect this PRP and decided to bounce off of it very recently. This was today. Today, meaning the trading day today, not necessarily today in your local time zone. Within 24 hours is how I can put that. So yeah, we're looking pretty good on this one. If you are still in this trade, feel free to stay entered. If you're not in this trade, I wouldn't necessarily recommend entering yet, as it hasn't hit the trend line yet. Feel free to have have this trend line and use it as well. I'll go ahead and put this in the chat. So there's just 5 minutes left. Anything anyone else wants me to go over? I might have missed some stuff you guys asked me to look over. All right. Well, with that being said, it looks like we are all set for today. I hope that you all learned. Oh, what's this? Oh, yeah. The recording will be on the website. I can show you where that is really quick. So you just go on to our website, Blue Capital FX. You go to the login and the classroom vault. It will be here, Technical Analysis 101 with Blake. That's me. And hopefully that they'll be there very soon. I know that we're working on adding them currently. So with that being said, thank you so much for attending the session. If you did like the session, go ahead and say so in the chat. I'm gonna put this on my Instagram story. Thank you guys so much for attending. I hope that you all learned a lot. My Instagram, I'll go ahead and type it into the chat. Right. Later, guys. See you next week on Monday at same time, 1:30.